Hello and a warm welcome. You've joined us on Market Fatafat right here on ET Now. I'm Ashesha Advaryu. With me is Ankita Saxena. And this is a show where we discuss all the stocks that are buzzing in trade today. And Ankita, we did try to recover from the lowest point of the day, but despite that, sitting with a cut of nearly 150 points as we speak.
Absolutely, Ashesha. In fact, yesterday we expected a good recovery coming in the second half like we did yesterday, but today we are not recovering from that. In fact, we are hovering around the day's lowest point. We are not even managing, we have actually managed to scale the 24,450 levels, but that's where we are at as of now. We are trading with cuts of 0.5% on the Nifty. Nifty Bank also hovering around the day's lowest point with cuts of almost 369 or 0.6% cut coming in on Nifty Bank as well. Broader markets also reeling under selling pressure. Small caps down 0.6% and mid caps trading with cuts of almost 1%. So it's the mid cap that is really underperforming today with cuts of 1% coming in. As far as the sectors are concerned, barring Nifty Media that has been holding out in the green, all the other sectoral indices are in the red, especially the realty and the metal pack that are down and out with cuts of almost 1.5%. Realty, remember, has been taking it on the chin for a while. Nifty Metals also losing its sheen in trade today with cuts of 1.5%. Nifty FMCG, Nifty Pharma, Auto, also all of them are in the slow lane today. So largely the market breadth looks tilted in the favor of declines, but there are individual stock movers that on the back of earnings and on the back of a news flow that are buzzing in trade. And for that, let's get started with the show. We'll get you all the stocks that are buzzing in trade then, Ashesha.
Well, yes, and we have Kunal Shah, Senior Technical Analyst at Mirae Asset Sharekhan now joining us. And on the research side, we have Kanishka and Rabinder as always to take us through all the stocks that are buzzing in trade. But first up, let's put the spotlight on LIC, and that one reported its numbers yesterday, because of which the stock continues to remain in focus today. And it was a good set. APE growth stood at about 9.4% on a year-on-year basis. VNB margins at 15.4% versus 13.9% that the company had reported same time last year. Management commentary, in fact, has also been very positive. They say that they are confident of continuous VNB margin growth over last year that is likely to sustain going forward. New products will be aimed at higher ticket size and consumer needs, which will also drive growth going forward. Now, Motilal Oswal has maintained its buy stance, and they've revised the target price to 1,080 versus 1,150 earlier. And the management also expects premium growth to recover in the second half of FY26, and the focus will remain on absolute VNB growth as well. So LIC, the stock is up nearly 3.5% after it reported very strong set of numbers.
All right, LIC is reporting good set of numbers there, but we also had the management. We caught up with the MD and CEO R. Doraiswamy on the way ahead for the company. He spoke to us about the plans for the VNB margin improvement, the non-par in APE. Let's go across and listen in to what he had to say.
We are focusing towards a regular but gradual build-up of our VNB margins so that we are not behind anybody, and we are looking at building up in a continuous and consistent manner. So we have reached last year around 17.8, which this year will be, as the year progresses, there will be progress in our VNB margin this year also. We also took a directional change in 2022 itself, that we will be slowly improving the non-par component so that we are able to balance both. We will have par as well as non-par. So towards that, the last 3 years we have been bringing up a lot of new products which are on the non-par side. Today we have a very big bouquet of 51 products, out of which a substantial number is from non-par, and the non-par is also getting the attraction of the customers. So as you said, the non-par APE has grown at a rate higher than the par. Slowly we have as of now reached 30% share of non-par APE. There may be some more increase to the non-par share in the near future, but we will now also have par products added to the portfolio, by which we will have something around 40-60 or 45-55 kind of a proportion that we will be able to reach. That's what we are looking at.
Okay, so that's the word coming in from the management of LIC, and they're sounding very bullish in what the outlook is going forward. But shifting focus to NTPC then, and Kunal, you've picked up this stock for us. Tell us, what do charts indicate for this counter?
I think overall, if you look at the power sector, this is one sector which is free from the tariff So I think there will be not much impact over here in the entire sector. And NTPC has been one stock which has been showing a strong buying interest in this volatile market. And I think we can expect further upside in the stock from the current levels. Good consolidation breakout what we have got in today's trading session. So one can look to continue adding on dips NTPC. 320 is the strong support, so that will be a stop loss. My target on the higher end on a positional basis will be 370.
All right, moving on then to the next counter that is in focus, and that is Biocon on the back of its quarter one results. Let's take a look at what the results look like. The net profit has come up at 31 crore rupees, up 95% on a year-on-year basis. The revenues are up 15% at 3,941. The EBITDA stands at 749 crores, and the margins have improved to 19 odd percent versus actually margins are pretty flattish there at 19 odd percent. But the management commentary, according to the CEO and the MD of the company, Siddharth Mittal, the sequential financial performance is has reflected the one-time positive impact of lenalidomide launch quantities in quarter 4 of FY25, and the capitalization of new manufacturing facilities in the previous fiscal have impacted the margins. Couple of other things that stood out were the generics margins that were impacted due to the cost from the 3 new facilities, and the generic segment profitability expected to improve with the upcoming product launches, filing in these new facilities. Also, the insulin aspart launch is imminent, and with the ramp up that is aligned to the US. And on the back of this, Biocon is in focus today. In fact, it is trading with cuts of almost 3% on the back of weaker than expected set of results. So it is less than what we were expecting. So it's trading with cuts of almost 3% in trade.
Okay, so weaker than expected set of numbers, and that's weighing heavy on the stock. But let's also put the spotlight on Titan then, and this one is also in focus, Rabinder, on the back of its results. How are they, and what do brokerage houses have to say now?
Well, yes, Titan is in focus on the back of their quarterly result, and the company's revenue grew by more than 20% year-on-year basis at 14,563 crore. And if we talk about net profit, the net profit also saw a good uptick of more than 33% year-on-year basis, and EBITDA was up by 34% year-on-year basis, and margin has increased from 10% to 11.2% year-on-year. So overall, a strong set of number for the Q1 of Titan, and the management in the con call say that they are very bullish on that Titan Engineering and Automotive Limited, and brokerages has come out with a note, and Goldman Sachs has maintained their buy rating, and they have hiked target price rupees 4,200 as compared to earlier target price rupees 4,000, and Investec has also maintained their buy rating with target price hiked to rupees 4,035. Jefferies maintained their hold rating, and they have also hiked target price rupees 3,800 as compared to earlier target price rupees 3,600, and Axis Capital has also maintained their air rating with target price hike to rupees 3,850. So back of the strong Q1 number and the positive management commentary and target price hike from the brokerages is leading to a stock to uptick, and the stock is up more than 1.5%.
All right, speaking of which, CK Venkataraman, who's the MD Titan company, says that the 50% tariff will impact the consumer interest. Now, let's also listen into what he had to say about the Titan's international business.
The 50% tariff, if it finally deployed, we still don't know. The end of August will tell us that. If it is deployed, it will have a huge bearing on the customer interest in jewelry in the US very much. But that we'll have to wait and see. The impact on so it'll have a bearing if it actually prevails like that after August on that much of the export that happens. But coming, to Titan company, the share of the US market to Titan's total sale is, just a little over 2% as we speak. And therefore, it's not at all a deal breaker for Titan company. Obviously, we want to, grow in the US, and therefore we need to find ways of making the products affordable in the US market. Our overall international business has been rising, including the sale of Tanishq in the GCC in Singapore, and we have more plans in those markets. We have just started the acquisition process for Damas, which is a brand which is targeting the Arab market, which is also in those countries, and therefore the overall international jewelry business of Titan company is rising. So in that context, manufacturing closer to where we sell irrespective of tariffs, is also a step in the right direction.
Okay, so that's the word coming in from the management of Titan. They have expansion plans globally as well. But shifting focus to a gold financing company then, Manappuram Finance. Kunal, you've picked up this one for us. What do charts indicate? And from the current 263 level, where do you see the stock headed?
I think the gold financing companies will continue to gain momentum with the rise in the price of the gold. And Manappuram has been one stock where dips have been bought into aggressively. So we expect this momentum to continue on the higher end. The lower end support for the stock is now placed at 253, which is a strong support, and we expect this to go at least towards the mark of 274, 280 in the short term basis.
Alright, that's Manappuram Finance on the charts. But moving on to the next counter, Kanisha, you picked out Reliance for us. Tell us, why have you picked out Reliance and why is it in focus?
That's right. So Reliance is in focus because ahead of its highly anticipated AGM that's on 29th of August, Nuvama has come out with a report and it says that the street is eyeing key updates on the company's roadmap to double its business by 2030. This would include the doubling of Jio and retail over the next 3 to 4 years, as per the note. Now, the brokerage, it also expects announcements on new energy ecosystem from polysilicon to green hydrogen and battery manufacturing, along with cost-saving plans using captive power, green power. Other than that, the brokerage says that the street is watching out for any clarity on IPO timelines for Jio and retail, potential FMCG expansion, Jio Hotstar strategy, and Petchem growth. Ahead of the AGM that's due on August 29, Nuvama retains a buy rating on Reliance, citing long-term growth triggers despite near-term holdco discount concerns. And, as we see, the stock, however, is down about 2% amid an overall downtrend in the market.
So some important CL, IOCL continue to remain in focus. In fact, BPCL is up nearly 3.5% today, and this is on the back of an ET Now exclusive where we are getting to learn from sources that Union Cabinet is likely to consider LPG compensation today. This could be to the tune of 31,000 crores, the compensation amount, and compensation will be provided to oil marketing companies to cover their losses. This is an ET Now exclusive story. BPCL up 3.5% on the back of this news.
Alright, BPCL in focus on the back of that ET Now exclusive. But let's move on to the next count. Kunal, you picked out Eicher Motor for us on the charts. Tell us, what do you see on the charts for Eicher Motor? Eicher Motor hasn't really, it's been moving in a range for the last 6 odd months. From here on, how do you see the stock moving now?
I think definitely in the last 1 month or so, the kind of volatility what we have seen in the markets and the correction, this has been one stock which has been resilient, and I expect further momentum going forward in this stock. So relative strength is clearly visible. So the structure is looking positive. One can expect all-time high levels again to come back on Eicher Motors. So this is a buy. Keep a stop loss on the support is at 5,350. I'm expecting targets of 6,100 in the coming month.
Alright, moving on to the next counter that is in focus, and that's Crompton Greaves that is in focus in the back of its Q1 results. Now, the profits for Crompton declined 19% on a year-on-year basis at 122 crores versus 152 crores. The revenue was also down 6.5% on a year-on-year basis at 1,998 crores. The EBITDA was also down 17.5% on a year-on-year basis at 192 crores, and the margins also saw a downtick of 128 basis points on a year-on-year basis at 9.6%. Now, Crompton has been whipsawing in trade today. In fact, it has picked up from the day's lowest point to come into the green. Is now actually seeing some buying action come in after that fall. It's now in the green with gains of 0.3%.
Okay, Crompton Greaves, that one is up. But another stock that's buzzing in trade today is Kalpataru Projects International. In fact, the stock is soaring in trade today, up 7%. Rabinder, tell us, was it on the back of numbers?
Yes, on of the quarterly earning, Kalpataru Project International is in focus, where company reported a strong set of number in the quarter gone by, and the company's reported revenue at 6,171 crore as compared to 4,587 crore, with an uptick of more than 34% year-on-year basis, and net profit also more than double from 93 crore to 214 crore year-on-year basis. And if we talk about EBITDA, then EBITDA has increased by 38% on a yearly basis, and margins also also saw an uptick of from 8.3% in Q1 Q1 FY25 to 8.5% in Q1 FY26. And management in the con call said that the company expect 20 to 25% revenue growth for FY26 at both standalone and consolidated basis, and they are targeting an order inflow of rupees 26,000 to 28,000 crore for oil and gas in the Middle East. They are one of the limited number of Indian companies that qualify to work with the major utilities. Of the strong Q1 number and the positive management commentary, stock is in focus and the stock is holding a gain of more than 7%.
Alright, Kalpataru Projects in fact is one of the top gainers in trade today with up almost 2.7%. But with that, it's time for a quick breather. Don't go on the other side. We are getting you more puzzles. Stay tuned.